Okay, here's Maurice, who's in Ottawa. Go ahead.
Yes, good afternoon, Mr. Bunting. I just would like to ask your gentleman there regarding Qualcomm. I bought it at 81 and change, and now it went down almost 12%. And I was thinking, would it be better to sell it for now and go into another like Pfizer or Costco? And what would be the best entry point in these two?
Right. Okay. Thanks,
Thank
Maurice.
you very much.
Unfortunately, for now, short term, he bought it at a recent peak.
Yeah. So Maurice, let me take your question in a couple of parts. First of all, we really like mobile data and mobile devices as a theme. Qualcomm's difficulty right now is that they do have some challengers. They've had a really dominant market share. They've had some difficulty in China. Chinese felt that Qualcomm had an unfair monopoly. But there are some challengers. And one of the challengers is a company called ARM Holdings, ARMH, that trades on the NASDAQ, but it's a UK company. They have some very interesting technology, which is a low-power chip that doesn't consume a lot of electricity. And they are taking market share for sure. So that's a company. If you wanted to stay in semiconductors, ARM Holdings would be a good one. Another one would be AVGO, a little bit different, but also chips for mobile devices. When you bring up companies like Pfizer and
Costco, I think, was the other one.
Listen, those are both great companies. We own them both. We have fairly targeted portfolios, but you've hit on two key themes, healthcare and pharmaceuticals, and retail. I could recommend both of those stocks. They're going to be very different than a Qualcomm, probably somewhat less volatile, but both play into important themes in this market. Lower end retail is doing very, very well, and the pharmaceutical companies are getting great price increases and good profit.
Have a look at this chart here. Let's throw it back up again. The orange line is ARM Holdings, which is a supplier of Apple, and it's really taken off since the fall compared to Qualcomm, and it has been a big outperformer over the course of 5 years, as we saw there. So there are some ideas for you, Maurice. Thanks for that. Bob's in Victoria. He's next up. Hi, Bob. Good morning.
Good morning, and thanks for taking my call.
You're welcome.
I'm interested in making a long-term investment into Verizon, and I'd like David's comments on the company and, most important, the security of the dividend over the long term.
Okay.
Thank you.
So, Bob, I think that certainly at this point you've got a company with a secure cash flow and a secure dividend. The difficulty, I think, is that the service providers are having a hard time getting paid for what they do. There's recent legislation in the U.S. around what they call net neutrality, which basically makes it harder for the service companies to tier their pricing to their users. The landline business is weaker. Of course, Verizon's got a big mobile business, and that's a pretty good business. The telcos as a whole behave much like bonds do. They tend to be tightly tied to interest rates, and I think that there's some concern that with short rates maybe starting to rise over the next few months, there could be a headwind for some of the telcos. So the telco sector as a whole, I think, is less attractive. If you're looking for the same kind of characteristics, a predictable business with a good cash flow and good dividend with some growth, I'd probably steer you in the direction of pharmaceuticals, maybe a company like Pfizer.
Thanks for the call, Bob. Next up is Natalie, who's in Toronto. Hello.
Hi, thanks for taking my call, Mark.
You're welcome.
Mr. Burrows, last time you were on, I tried to ask about BlackRock. You were not allowed to answer because you did give me your opinion about I forgot the name of the company. Anyway, I'd like to have your opinion about BlackRock, and is it a good entry point? It's for a very long hold.
Yep.
So thank you for your help.
So Natalie, we are believers that we have gone through a watershed shift over the last 3 years, and that we are now in a secular bull market for stocks, which means that for the next 10 years, with interruptions, stocks are probably a much better asset class than fixed income and real estate and commodities. So who benefits from that? Well, one of the obvious beneficiaries are asset managers, companies that get paid a fee to manage money. So BlackRock is a leader in this space. It's a $60 billion company. It's pulled back a little bit from the highs at $382 or $383, but there's a very clear trend in place. I think that the market's a little concerned in the short run about some of these concerns about emerging markets and the strong dollar, but I think that that's all it is. It's a short-term issue. I would buy BlackRock here. We are shareholders. We own it among others, other asset managers and some of the exchange companies, because we just think that as time goes along, money gets reallocated to equities, and BlackRock is a winner.
We will squeeze one more in here before we get to past picks. Jill is in North York. Go ahead, Jill.
Thanks for taking my call.
Sure.
I was asking about Enbridge, if this is a safer bet to stay with the pipelines rather than the oils companies. And I agree with you that I think oil's going to stay low for a long time, because last time this happened, Putin or whoever invaded Georgia. So I think we have to keep oil low to keep him at bay. Thanks.
So do you group Enbridge in with the Kieras and AltaGas's of the world?
So Enbridge fits in the energy infrastructure space. Having said that, when a group goes out of favor, what you always want to do is look for the absolute leader in the group, the one that holds up better than the rest, the ones with better fundamental characteristics, and I would make Enbridge probably the leader in this space. So the stock has held in remarkably well. There's very good sponsorship. They've got a great history with their dividend. If I was going to own one, it would be Enbridge, and it's not cheap. But I think that it probably, around these prices, is a good one. Just recognize that energy infrastructure may lag a little bit in the short run.
You hold a sprinkling of this? Or?
We own a little bit of Enbridge. And, we do own a little bit of Keyera. Our energy exposure between refiners, which would be about 5%, we have about 5%, which would be in energy infrastructure, just a small weighting.
Let's take a break here with David. We'll get to his past picks in just a moment. He made these selections April 2nd of last year. Stick around.